What's up, everyone? My name is Ale. Welcome back to My World of Stocks. Sorry for being late again this month. I'm trying to get my stuff together. I'm trying to be consistent with my uploads. I promise I'm going to get better. But welcome back to my favorite series on the channel as well, where we talk about what stocks I purchased last month, which was August, and what stocks I'm thinking about buying or selling this month here in September. Now, we used to also cover the economy on a bit of a macro level in these videos, but I think I'm actually going to do separate videos for those just because it was beginning to be too much information for just these single videos. So I'd rather just kind of talk about what stocks I'm buying or selling currently and then do separate videos for broad economic topics and things like that. Okay, so with that said, let's start with part one, and that's going to be what stocks did I buy or sell last month, which was August 2021. And believe it or not, despite the economy being in pretty bad shape right now, I was actually super active and I did not do any selling, but I actually did do quite a lot of buying. In fact, I bought eight different stocks. I bought eight different stocks last month, and four of them were stocks that I already owned that I just kind of added to my positions. And the other four were actually brand new stocks, brand new additions to my portfolio. So we've actually got a lot to talk about here for the past month in terms of what stocks I purchased. Now, fair warning, these are actually pretty risky stocks because let's put it this way, because the stock market is trading so high right now and so expensive, I've been kind of digging and looking for opportunities wherever I can find them. And it just so happened that there were some kind of, there were some riskier stocks out there that were falling, basically crashing, and I just felt like their prices were too attractive to ignore. And you guys know me, I love to buy my stocks when they're going down. So I couldn't resist and I went out and I bought a bunch of different stocks. So I'm going to run through them for you guys. We'll do that first, and then we'll transition over to what I'm thinking about buying or selling here this month in September. So let's start with August 1st, and we'll run through the eight different stocks. Okay, so let's start with the four stocks that I already owned, and then we'll run through the four brand new ones that I added to my portfolio. But starting with the ones that I already own and just kind of bought some more of last month, one of them was the world leader in music streaming in Spotify, ticker symbol SPOT. And this is a stock that has been beaten down over the past year and is still down close to 40% from their highs and now trades at around $247 a share. Last month, though, it was trading even lower, and I was able to pick up some more shares at around 210 in mid-August. So that was just a great price in my opinion. And like I've said before, Spotify is a speculative stock because they do lose hundreds of millions of dollars a year, but revenues tend to soar by around 20% or more a year. And I just think it's a stock worth betting on, considering how much larger I think music streaming, podcasts, and even video streaming will be in the future. Spotify should be a pretty good bet on those markets. I think I'm done probably buying for now since the stock has already climbed by close to 20% from that last time that I purchased it, but long term, I'm very happy to hold it. Okay, next up, I bought some more of Endeavor, ticker symbol EDR, which is a stock that I own almost entirely just for the exposure to the UFC, the Ultimate Fighting Championship, which they are the parent company of. And that's because the world of mixed martial arts will only get larger over time, and I really do think that the UFC will always be the market leader, or at least for the foreseeable future, and in a very similar way to that of something like the NBA or the NFL or MLB, things like that. So I'm more than happy to be a part owner through investing in this stock. Speaking of which, I went ahead and purchased some more shares at around $23, which was a pretty good price considering that the stock has now climbed back up by over 17% since then. It is still below the midpoint of their 52-week range, but I don't think I'll be buying any more shares at this time given that it's already climbed up by so much in a short period of time. And it's also another speculative stock that I don't really want to be overly exposed to, as they do struggle with profitability, just like Spotify. Long term, though, it is a stock that I want to take a chance on. Besides that, though, I did also purchase some more shares of a couple of Chinese stocks for obvious reasons, since they've been getting hammered by Chinese regulators over the past year or so. And if you want to know more about that, I'll just direct you over to my last Alibaba video where I explain everything in greater detail. But speaking of which, I did go ahead and buy some more shares of Alibaba, ticker symbol BABA, and I bought them at a few different price points. but the lowest I was able to catch it at was in the 150s. As of now, though, it's climbed back up to the 160s, but even here, it's still down close to 50% from their highs. Say what you will about how risky Chinese stocks are, and by the way, I absolutely agree with you that they are very risky for a number of reasons, but I also remember a time when so many people would leave comments wishing that they could get a dip on Alibaba stock when it was trading at its highest levels. And now that it's fallen all the way down, it's really crashed, nobody seems to want it anymore, which I think is absurd. I definitely plan to keep buying this Chinese e-commerce giant that is not only profitable, but also typically grows their sales by around 20 to 30% or more a year. It's very hard to beat at Alibaba's valuation. Of course, the other Chinese stock that I had to pick up some more shares of was Baidu, ticker symbol BIDU. And like Alibaba is the Amazon of China, Baidu is really the Google of China, and that's a bet I'm willing to take on as well. Went ahead and purchased some more shares in the $140 range, and since then the stock has rebounded nicely up to the 160 range, although it is still down over 50% from its highs at today's levels. So like Alibaba, I'll probably be buying some more of this one going forward as well. Their financials are more volatile than Alibaba, and they're not as profitable either, and they don't have the same levels of consistent growth as well, which is why I've always kind of preferred buying more of Alibaba overall, but it's still another good option at these prices, and I don't think that this one should be slept on. I think it's a pretty good long-term bet. Okay, so those were the stocks that I already own that I added more of last month, but what about the 4 brand new additions to my portfolio? Let's quickly run through those right now, and then we'll talk a little bit more about what stocks I'm thinking about buying or selling this month here in September. And first up here, we've got the mobile gaming company Zynga, ticker symbol ZNGA, which I went ahead and purchased around early August for right about $8 a share. Since then, it's climbed back up a little by about 10%, but even here, it's still down almost 30% from its highs and currently sits near the bottom of its 52-week range, which I do still think is an attractive price. I'm kind of 50-50 on whether I'll be buying any more here in September just because I've already purchased so many spec stocks, but I think as long as it sits in the $8 range or especially less than that, then the stock is probably a buy long term. And I say speculative, but really they've been profitable for 3 out of the last 4 years, and sales have been soaring by around 40%. Now that growth was definitely lifted up by people staying home because of the pepperoni and spending more time playing games on their phones and things like that. So I do expect that growth to come way down after, but with popular games like Words with Friends, Zynga Poker, and partnerships with Game of Thrones, Harry Potter, and even a new one with Star Wars, I just think there will be plenty of mobile games in the future to make Zynga one of the best speculative stocks in the market, especially over the long term. Next up, I bought the super popular language learning app called Duolingo, ticker symbol DUOL, and I actually bought it at 3 different price points, but I kept buying a lot heavier as it dropped, and the lowest I was able to buy it with the largest amount of shares was at less than $120 a share, which looking back on, that was probably my best purchase of the month because it's already climbed back up by almost 45% from those levels. And that's really just the game when it comes to my strategy of buying stocks heavier and heavier as they go down and then riding back up the recovery. I saw the stock was trading at less than their IPO price, and I just thought, yeah, this is a good time. This is a time that I want to be jumping in, and luckily it's been working out for me so far. Definitely won't be buying more in September because it's already climbed by so much, but this is a very high growth company at around 100% revenue growth or more every year, and I definitely plan to hold it very long term because they have a very real shot at being one of the leaders in the online education market, especially in language. And if you want to learn more about them, I highly recommend my Duolingo stock review video. Just search OLID Duolingo and it should pop right up. Okay, moving on, I also purchased the telemedicine leader for the first time ever called Teladoc Health, ticker symbol TDOC, at the low $140 range. And since then, the stock has pretty much stayed the same. It's pretty much been staying at these kind of same levels, so I definitely would be willing to buy some more shares here in September. I mean, When you zoom out, this is a stock that is currently down over 50% from its highs and sitting right at the very bottom of their 52-week range, despite them growing sales by over 90% last year and still over 80% expected this year as well. Obviously, this is lifted up by the pepperoni, but I really think that the future of medicine will heavily involve remote visits, and Teladoc has one of the best shots at being a market leader in that space, so I'll continue to bet on this one long term. Okay, and finally, I had to balance out all of my speculative buying with something a little more reliable and that also pays a nice dividend, and I decided to go with Brookfield Renewable Partners, ticker symbol BEP, who is a very strong play on the renewable energy markets, and with heavy exposure to hydro, wind, and solar, as well as cash flow growth of more than 10% a year, double-digit growth a year. It's basically allowed them to pay a very reliable dividend that still yields over 3%. So I decided to purchase this stock right around $38 a share. By the way, the reason this looks a little different than the other screenshots is because this one is in my E-Trade account. But anyway, since then the stock has climbed up a little bit, a couple dollars actually, which does make it a little less attractive, but even here, it's still around the midpoint of their 52-week range, so it's probably not a bad time to keep buying when you consider that dividend. I might wait a little though, just to see if there are any more dips, but there's definitely a decent chance that I'll consider this one throughout September as well. Okay, so that was a lot to go through. It was a super busy month in August, but what about here in September? Well, as of right now, I don't foresee any selling at this time, but even when it comes to buying, I do think that I need to slow down a little bit just because August was such an active month where I bought so many stocks and so many kind of riskier stocks too. So here in September, I think I'm going to try to balance things out a little bit. Obviously, still the stocks that I mentioned throughout August, some of those I'm still kind of interested in September. But besides that, I think I'm going to try to balance things out a little bit here in September, do a little bit smaller buying, but I'm going to try to buy a couple of kind of safer, more reliable dividend stocks to kind of balance out the riskier ones. But I'm also going to buy some more of one Chinese stock that is not Alibaba or Baidu, but I just can't resist it. I got to buy some more of this one too. So let's just quickly run through these and then we'll wrap up the video. And first up here, let's just quickly get the other Chinese stock out of the way, but you guys probably guessed this one. It's the giant gaming, social media, and internet technology conglomerate known as Tencent, ticker symbol TCEHY, which has always been one of my favorite stocks in the space. You guys have heard me talk about it before on the channel, but because of all the regulation stuff, it's a stock that has been crashing really hard just like the others. Most recently, China regulators summoned Tencent and other gaming companies as well to remind them of regulations against certain screen time limits for children playing games, and they are reportedly freezing or at least slowing down the approval of new games as well. On top of that, China has also been cracking down on Tencent's monopoly over music streaming, which has altogether resulted in the stock having now fallen by close to 40% from its highs. Still, I continue to believe that this is one of the best stocks to own long term. Not only do they have extremely solid growth on both the top and bottom line, with another close to 20% revenue growth expected both this year and the next, but they also have the third largest social media market in the world after Facebook and Google, the second most market share of mobile messaging after Facebook, over half the entire Chinese gaming market. They're the world leader in gaming revenue. They have the second most market share of Chinese mobile payments, only behind Alibaba, and they also command the fifth most cloud market share in the entire world as well. Add it all up, and Tencent trading around 40% lower from its highs is probably going to be one of the best buying opportunities you'll ever see in this stock. So I'll be looking to add some more shares to my position throughout this month. Okay, with that last Chinese stock out of the way, let's finish up the video with two safer dividend stocks that I feel have some very attractive yields right now. And first up, that'll be the pharmaceutical giant Merck, ticker symbol MRK, which was a new addition to my portfolio earlier this year, but because it continues to trade in the lower part of their 52-week range and is still down over 17% from their 2019 highs, it's not only left them with an attractive valuation, but also a dividend that yields over 3.5% with a low payout ratio of under 50% and double-digit years of consecutive growth as well. They also have a best-selling drug over the next few years and a robust pipeline to complement it very well, which does also help them produce very solid financials year after year. In my opinion, that dividend is extremely safe and will likely get even larger over time. Plus, considering that Merck is one of the very few stocks in my entire portfolio that I'm actually down on, in this case, I'm down about 2% on that position, I'll be looking to buy some more shares at these prices to lower my cost basis. Okay, and finally, the last stock that I think I'll be adding some more of this month will be Verizon, ticker symbol VZ. And it's not really a stock that I'm super crazy about, but it just so happens that this is another stock that I'm currently down on at over a 6% loss. So I kind of need to start buying some more here if I want to lower my cost basis. But it also just so happens that thanks to their poor performance, currently down over 12% from its highs and basically flat over the past 5 years and still sitting right at the bottom of their 52-week range, well, that's not only left them trading for 50% cheaper than the sector, but it also has left them with a dividend yield of almost 5% and a low payout ratio of below 50% to go along with it. So I'd say that it's probably more than safe at these levels, even though that yield is pretty darn high. The thing that scares me about Verizon and other wireless internet-based companies, though, is that satellite might end up being a threat in the future, like for example Elon Musk's Starlink. But in my honest opinion, I just don't think that they'll be able to compete with Verizon or AT&T on things like speed and capacity when those two have fiber lines and closer cell towers that will probably provide better performance and consistency. I could be wrong, of course, but at these lower prices and with the dividend yield so high, I just think Verizon is a decent bet, especially considering that they are consistently ranked as the best network, which allows them to charge higher prices of premium on their service than a lot of the competition. And that leads to gigantic sales of over $100 billion every year and fairly large profits to go along with it. It's not an exciting growth stock, that is not what they are. But after buying so many of those last month, I think a couple of these more kind of boring value dividend stocks will be a solid choice to kind of balance things out a little in my portfolio. Anyway, there you have it, guys. Those are the stocks that I've been buying or selling, that I'm thinking about buying or selling, all kind of right now currently. Let me know your thoughts down below. Are there any stocks that I mentioned that you're buying or selling, or are there any that I did not mention that you think I should be looking at closer? Hey, let me know down there because I'm always looking for new opportunities. So if I see something I like, I might actually pick it up. In fact, that's actually how I got into Duolingo, by the way. One of the viewers kind of mentioned it. I did know about it, but one of the viewers mentioned it, said it was like such a good opportunity, and I was like, you know what, I'll take a closer look at it. So I took a closer look at it. I liked what I saw, and I ended up buying it. So I always take your guys' comments seriously, so make sure you leave them down there. I'll try to respond to the ones I can. But anyway, thanks again for stopping by, everyone. Thank you for the support. It means a lot to me. Hit that like button if you enjoyed the video. I will catch you guys in the next one. Take care. Bye-bye.